Back with closing trades, and yes, let's get into conversation with Sudip Bandyopadhyay, market expert, to get a better sense on the kind of pullback that we've seen from the day's high on the Nifty, the Sensex as well. Sudip, hi, good afternoon, and thanks for your time. What do you make of the fresh all-time high that we hit today? Yes, we were able to sustain that momentum for a couple of hours at best, but then we've seen a sharp pullback from the day's high as well. You believe this is just a mild amount of profit taking, something that we see usually, or do you believe that this was just a one-time move that we saw on the Nifty, and that correction or that benignness that we've seen in the market is here to stay?
Well, I think you have to understand the entire dynamics. I think Indian markets are definitely have a positive bias now, and the movement is definitely upwards. In between, there will be corrections. In between, there will be consolidation. I don't think we should get too perturbed with that. Directionally, we are moving up. Today's all-time high may have come down from that level, but absolutely, it's a matter of time before we again cross that and keep moving up. That's the trajectory. Domestic macroeconomic factors are very, very strong. Corporate results have started improving, and Q2 numbers were much better than what the market was expecting. So things are moving in place, and the time correction the valuation has happened. So the valuation also, it's not cheap, but doesn't look too rich in a lot of cases. Yes, there are global issues which will definitely swing the markets, whether it's the India-US trade deal or Ukraine-Russia peace. I think these will swing markets up or down, but trajectory undoubtedly is positive as far as Indian markets are concerned.
Okay, so that looks good. And Sudeep, you're reading on some of the banking names and the overall financials pack today. We're seeing a lot of show of support coming in from Bajaj Finance. ICICI Bank is doing well. Bajaj Finserv over the last week has been doing exceptionally well for itself too. The entire financials back, it could be banks, NBFCs or PSU banks. Where do you think the next growth rally could come within the financials basket?
Well, we have been positive on the entire BFSI space, and we believe this will continue to do well. We are in a falling interest rate scenario, and normally the NBFCs gain more than proportionately when interest rates are falling. And when things stabilize, banks also start gaining in terms of margin and in terms of incremental loan book. But having said that, in the entire BFSI pack, we do like the PSU banks. I think there is a significant valuation gap, and that advantage PSU banks have today. If you look at a Bajaj Finance and many other private sector NBFCs and banks, they are quoting at a 5-6 time price to 5-6 time of the book. Whereas even the largest and the best PSU bank, SBI, is quoting at 1.1 time book. You look at some of the other smaller PSU banks, they're quoting at a discount to even less than 1 time to book. So there is a significant value pickup opportunity. The government is talking about consolidation and merging some of the smaller PSU banks with the larger ones, creating larger banks. All that may or may not happen in a time-bound manner, but I'm not going there. I'm saying irrespective of whether these things happen or not, the reality is there's a valuation advantage if somebody goes and buys some of the PSU banks, and that is the trade as of now. We do like Bank of Maharashtra quite a bit. We do like Central Bank. Of course, we do like State Bank of India. I think opportunity exists in all this and many more PSU banks.
The PSU banking space overall looks good structurally and fundamentally, but if you take a look at the move today, Nifty PSU Bank is the top losing sector, about a 1% cut over there. Kunal, it seems like Indian Bank lower by about 2.5%, SBI 1.5% cut, Bank of India too about 1.25% lower. Are these pullbacks good buying opportunities? Are you seeing them like that?
So pullbacks are here to continue for some more time, but I think eventually they would come out to be a point where the opportunity could be a much more stronger for these stocks to get back into a buying or a support territory. But I don't think that just a one-day correction to these stocks, a couple of percentage points from the swing highs, makes the trade attractive. We have to wait out for at least a couple of weeks, or for these stocks to come into a decent corrective phase. By that I mean at least a 5 to 7% broad correction from the swing highs could be a good opportunity where one could look to start chipping in.
Maybe wait and watch for PSU banks, but what about the ones who are already holding some of these names? Should they continue to hold?
Yeah, so I think I'm sure that most of the traders who bought the PSU banking names, they must have bought it at much lower levels. So I think in that aspect, it's a definite hold. It's just that it's a routine profit booking after 3 consecutive months of a strong price uptrend for the PSU banking names. You're bound to see a point where the stocks go into a correction. Now the correction, as I said, could be 5%, 7%, maybe slight more, depending on the beta of individual stocks. But then I think eventually these stocks would come back into a strong support territory. So if someone who's bought at lower levels and assuming these stocks are sitting up higher by a margin of 20%, 25% broadly, then I think it's a good strategy to continue to hold on.
So hold on to some of these PSU banking names. But while we're talking about top losers in today's trade, let's pull up the stock of Whirlpool and see where that stock has settled right now, because we were seeing double-digit cuts in the morning on that stock, and this continues to be the trend right now, 10.5% lower for Whirlpool of India. Now, this is of course on the back of a mega block deal. Now, remember, the street was anticipating this block deal to take place, but let's understand why such a massive cut on the stock, because the block deal was largely anticipated yesterday. What has happened is the block deal was expected to see about 95 lakh shares or 7.5% equity change hands. What has happened right now is that we've seen at open 11.8% equity change hands, as translated to about 1.5 crore stocks compared to the 95 lakh that the street was estimating. What makes the story worse is that the expected seller is the promoter entity, which is Whirlpool Malaysia Limited, and that is slightly negative for the stock. Remember, till December 2023, Whirlpool Malaysia held about 75% stake. Then in Feb of last year, they trimmed about 24% stake, and then they came down to 51%. Now, given that they have paired another 11.8% stake, around 32% oddly, roughly, is where their stake will now be in Whirlpool of India. So yes, these are some factors to keep in mind while you're trying to understand the stock move on Whirlpool today. Just on a lighter note, if you remember, all the way back in March of last year or Feb of last year, when you did see this block deal happening, the 24% stake cut, the first stake sale by the promoter, you had names like Aditya Birla Sun Life Mutual Fund, DSP Mutual Fund, ICICI Prudential, Nippon India Mutual Fund, SBI Mutual Fund, and some marquee domestic players participating in this. So post market hours today, we are going to have a better clarity on who the seller is, of course, but yes, all eyes are going to be on which group of buyers have participated in this block deal. So all eyes are going to be on Whirlpool. Kunal, any reading on Whirlpool on the charts? Almost 11% lower. Does that make the stock attractive compared to some peers from this space like a Blue Star or Voltas for that matter?
Not really. In fact, for the last 5 years, 2020 is where Whirlpool had made a high that was around 2,600 levels. And in the last 5 years, the stock has been consistently into a drag mode. The only positive sign which you're seeing today, of course, for the stock is the volumes being on the higher side. But then that's no guarantee that the stock will form a bottom for itself. We need to wait out for a decisive bottom to be formed for the stock. And the wait has been almost 5 years for the stock. So it's always better to be buying this on confirmation rather than on anticipation, because in a severe downtrend, it's very difficult to call out the exact time where the stock tends to form a bottom. We need to wait out for the evidences, the volumes to improve up higher, and the prices to gain significantly. As of now, maybe a wait, but then I think if the stock crosses levels of say 1400 to 1500 on a medium term basis, that could be a very strong signal of a potential turnaround for Whirlpool.
Okay, so that's take on Whirlpool on the charts. That stock under pressure, about 10.5% lower ever since the get-go today. But on that note, we'll slip into a very short break and keep the market conversation going on the other side. Back with closing trades, let's also welcome on board Arpit Bediwal, the Manager Derivatives Analyst, Equity Research at Motilal Oswal Financial Services. Arpit, hi, good afternoon, and thank you so much for your time. We've been interacting with our technical experts on the show before this to get a better sense on Nifty, Sensex, and Nifty Bank as well. But let's talk about some stock-specific action. Arpit, your reading on Ashok Leyland, given the way the auto index has been on fresh highs, and Ashok Leyland has just broken out today, a 6% uptick on that one. What is your reading on the charts? What levels are looking good for Ashok Leyland?
Very good afternoon to all. So if you see overall the auto index in strong uptrend, and if you look at the chart structure of Ashok Leyland, a classical structure on the monthly scale forming high rise, high low structure on the monthly scale from last 4 months. Weekly scale it was consolidating in the previous week, but as we see discussed also in the previous week, it gave surpass able to surpass about 148 levels, and today we've seen a strong move of almost 8 to 9%, 8 to 9% price up move towards new life identities. So looking at the chart setup wise, the new support would be around 150 levels. That would be a key support zone to watch out for. On the upside, looking at the setup wise, we can see a move towards 175 and then positionally 200 from a 2 to 3 months perspective. So setup wise on the all the time frames, very strong on all the time frames with major support around 150 levels for an upside move towards 175 and then positionally 200 plus levels.
Okay, so that's the take on Ashok Leyland as well as the overall auto index as well. While we are talking about indexes reaching all-time high as we near the end of the year, we have JP Morgan and Macquarie coming out with notes on their India strategy. Both of them are bullish on the Nifty ending strong, and Ashesha is here with more details on what their individual Nifty targets are and what is driving this confidence. Ashesha.
Well, yeah, so JP Morgan has gone ahead and raised its 2026 end Nifty target to 30,000 now. They've spoken about valuations where they believe that India valuation still continues to trade at a premium as compared to the rest of the world, but they say that the gap with emerging markets has now compressed to below long-term average. So that's their important take when it comes to India equity market valuations. They say that they continue to prefer domestic-oriented sectors versus exporters, and they are forecasting MSCI India earnings to by about 13% in calendar year 2026 and about 14% in calendar year 2027. So yes, they've gone ahead and raised their 2026 end Nifty target to 30,000 now. Meanwhile, we also have Macquarie. They've also come out there with their strategy note where they say that the Nifty is likely to close near 30,000 by the end of 2026 as compared to 20,000 earlier. So their preference now, they believe that Nifty is likely to close near to 30,000 going forward. They expect a moderation in earnings trajectory going forward, but they believe that the balance of risk has now tilted favorably. In fact, Macquarie has given a whole host of individual stock-specific ideas as well, and let's put a spotlight on that. First up, core ideas, which is their 6 stars. This includes HDFC Bank, TCS, Reliance Industries, M&M, Divi's Laboratories and JSW Steel. These are the 6 stocks they believe will outperform the market going forward. As far as tactical trading ideas are concerned, they Adani Ports, BHEL, Shriram Housing Finance, ITC Hotel, Titan and Havells. These are the 6 stocks they believe will tactically outperform the rest of the market. Lastly, 6 rising stars. They've spoken about 6 other rising stars within the market. Tata Communications, Make My Trip, Lemon Tree, LTTS, Delivery and Aditya Birla Capital. So yes, Macquarie has come out with the entire 2026 report and a whole host of stock specific ideas that you can work on probably to build your portfolio, and they've also gone ahead and raised their Nifty target price.
Okay, Ashesha, thanks for taking us through that. So yes, you have some brokerages that continue to be very bullish on where the Nifty could go ahead from here, JP Morgan and Macquarie both. But Sudip, before we let you go, you just heard Ashesha talking about some Nifty targets that both of these brokerages have come out with. What do you think could drive this next rally in the market? First, if you concur with these levels, and if yes, where do you think the next round of strength could come from?
Predicting Sensex and Nifty is a favorite pastime with a lot of us in the market. So I won't read too much into that. I would rather let's belabor on the rationale or the reason why the market can move up. I also firmly believe that Indian market has all the ingredients to move up. A couple of things, you have to look at the fact that FII holding in Indian equities is at all-time low. Now, somewhere the FIIs will start buying into India, and that trigger will be, to my mind, the India-US trade deal. As and when the India-US trade deal gets signed, you will start seeing a lot of money flowing in from the FIIs into India. That itself should propel the index to a new level. And remember, FII holding in Indian stocks is at its all-time low. So there is a scope for significant upward movement in FII holding in Indian stocks, and that will take the market up. The second fact is corporate results. We have probably seen the trailer. Second quarter was better than expected. We now expect third and fourth quarter to be even better. Consumption demand is coming back. The government has provided a lot of incentives in terms of income tax exemption for common man, also the GST rationalization, and we also understand that some more, incentive or some more reform measures are going to be announced in the budget, definitely, or maybe even before the budget. Now, if those reforms are also directed at increasing consumption, that should create a virtuous cycle for Indian corporates in terms of demand. Once demand is back, you will see private capex also coming back. That's one pocket in the entire economy which is still lagging, is the private capex. Now, if private capital expenditure starts coming back, I think we'll have a complete virtuous cycle as far as Indian economy and Indian markets are concerned. Yes, Indian valuations are not cheap, and it won't be, considering that we will be growing at around somewhere close to 8% GDP growth and about 3-4% inflation. So naturally, you will have a multiple which will be much higher than many other markets and many other developing markets. And for a country which is the largest amongst the developed economies, or amongst the larger economies which is growing the fastest, you should expect higher PE multiples. And that's the reason why Indian multiples will be higher and Indian markets will keep moving upwards even in the next fiscal.
Sudip, thank you so much for that, and thanks for your time. On that note, we'll let you go. Time now to slip into a very short break, viewers, and on the other side, we'll be tracking the last hour of the market and getting in some more ideas from our technical experts. So you stay tuned. We'll be right back.